What's happening, y'all? It's Mike, the Money Motivator. It's Friday, baby. You get your money, and I'm gonna teach you how to spend it. So, in today's podcast, I'm gonna talk about a couple of topics. Of course, I'm gonna talk about the stock market, like I always do. I'm gonna talk about interest rates, and the Fed is set to cut rates on their next meeting, which is perfect. It's already showing the market is going up and interest rates are going down. So if you have a house loan and you got a high interest rate like myself, be paying attention because it's perfect time to refinance your house. Also, the cost of goods and services, everything should start going down. So since we're talking about interest rates, let's talk about what effect the interest rates has on the market, right? So far year to date, the stock market is up 19%. Um 82 dollars on the year. And when I say the stock market, I'm talking about VOO, the S&P 500. The S&P 500 is a managed fund by fund managers, and it holds the top 500 companies. So in the S&P 500, you get a fraction of the top 500 companies, and it's managed. So if a company falls out of the top 500, then the fund managers replace it. Currently, the price of the S&P 500, we sitting at what, five $516. Now you don't have to invest $516 at a time. What you do is you buy fractional shares. Like me and my wife, we put $20 per paycheck in the S&P 500. You literally download a Robinhood account. The link will be in my description. You get free stocks when you do that. You type in VOO in the search bar, and you can set an automatic recurring payment. So you know what I'm saying? I buy stocks on a regular basis, and I manage my own investments just because I know how to read bank statements, and I try to outperform the market, which I normally do. But outside of that, I stick to the structure, I stick to the script, and I invest in the S&P 500. So since we were talking about um rates being cut, right? When the Fed cut interest rates. Since 1973, the average return of the stock market after the first rate cut was 4.9. So it looks like after rate cuts, the stock market tends to taper off a little bit. It doesn't perform as well, but that's not a bad thing. The reason why is because you always want to get your stocks on sale, right? So it's compound interest. The stock market is a market where you're buying fractional shares of companies. So as these companies are creating new products and making more money, and every time they report earnings, they're making more money and more money, you are gaining wealth by the company growing. So you invest in the S&P 500, you are gaining wealth on a daily basis. You know what I'm saying? If you start with $20, then you know what I'm saying? If you start with $20 and it's up 20%, then you get 20% of $20. And as you grow, over time, by the time you get the 30 years out, now your 20% is not, you know what I'm saying, or your 3% or whatever, you know what I'm saying? So it's a crawl before you walk situation, but it's the best way to build wealth. I'm talking about when you start out, you're gonna get 3 cent interest, and then 30 years later, you're getting hundreds of dollars a day added on to the investments that you just automatically have put in, right? So the Fed is cutting rates. That's going to help you in your pockets when you go into the grocery store. That's going to help you all around. But it looks like it's going to affect stock market a little bit, which makes sense. We're getting close to all-time highs, and September is usually a bad month for the market. So it's been going up so far. So I'm expecting probably mid-September for the stock market to probably start cooling off, make a pullback, and then probably around December time it might go back up. So that is interest rates, mortgage rates. I just checked yesterday, just hit the lowest level since February 2023. So mortgage rates currently sitting at a 6.29%, when you look into refinance, the ideal percent to refinance is about 1%. You don't want to refinance your house unless it's at least 1%. 1% is going to get you, probably a couple $100 off of your mortgage. Best bet, I would really wait for 1.52, but no less than 1%. So that's that. Main thing I want to talk to y'all about on this podcast today, though. I really want to talk to everybody that has not started investing, right? The best thing about investing is you don't have to know anything about the financial markets. You don't have to pick any individual stocks. You set, just like you pay Netflix every week, every day, you set it on an automatic recurring basis. I showed my wife her account yesterday. She was like, "Oh, that's my money." I was like, "You got to pay taxes on it, but that's all. That's all you." You know what I'm saying? Off of just $20 every 2 weeks, $40 a month. That's Netflix and Hulu a month. You know what I'm saying? Off of just building wealth. Stock market bought me my first car. Stock market helped me pay for, part of my wedding. So the stock market is not only a growth vehicle to help you retire early. I look at the stock market like, what I'm saying, if I have a bad day at work or boss call you in, they want to talk to you about something you did. You got a bad day at work. Every time you have a bad day at work, go buy some more shares of the S&P 500. Drop another $50 in the S&P 500 and speed up your retirement date. It's not just about retirement, it's about building wealth. It's about a OSH fund. You know what I'm saying? You and your wife get divorced and now you have to pay alimony or pay child support or whatever, and you lose your job, but the court still wants you to pay child support or whatever. You sitting on investments, you sitting on money, you know what I'm saying? And that's not what it's for, but you got the money just in case. Money loses value, and I'm going to talk about money losing value in a little bit. So, money is not an asset, it's not tied to anything. And when the Federal Reserve continues to print money, they devalue money. Also, our country is in $1 trillion deficit. We're in debt heavy. So, how is that going to affect situations? So, what it's going to affect, they're going to try to take away certain things, right? This is another reason why investing is important. They're going to take away like Social Security. The full retirement age of Social Security is 67. And what Social Security is, it is everybody that is currently working is putting money towards the Social Security fund, and the government pays for some of that as well. So they in the future, what it looks like is that they're going to push the date of retirement back to give people less funding, right? Because the our government can't manage their money. They just keep on piling on debt and piling on debt. But on top of that, we're having less kids. Think about it. Our parents had 10, 12, 14, 15 kids, and now we're having 10, 12, 14, 15 animals. So our one child versus their seven child, our working population is decreasing. So when you go to collect Social Security, you're going to have less money. On top of that, the value of the dollar will be worth less. On top of that, inflation will be higher. So it's very detrimental that you start investing because they're going to cut Social Security benefits. You're going to get less of a benefit, and prices of stuff are going to go up. It's not about being rich when you get old. It's about survival. If you want to be rich, of course, you start early. Um, but, it's a buy and hold situation. When the stock market go up, you buy. Whether it goes down, you buy. VOO S&P 500 in your brokerage account. Look it up and set it on a recurring investment. So I want to talk about the importance of the buy and hold, right? And why you should always be in the market no matter what. First of all, of course, compound interest. The longer you in the market, the less money you have to pay, and the more that you gain over time. You know what I'm saying? But y'all know I like to do my research, so y'all gonna really like this one. So I pulled up something and I was like, dang. So here we go. If you were to invest $10,000 in the S&P 500, remember that's the top 500 companies in the world, right? So if you were to invest 10,000 in the S&P 500 from January 2003, um, from January 2003 to December 2002, if you left it invested all the time, the whole time through that period, that just that $10,000, you would be at 64,844. So what does that tell you? That tells you that when you're going out to work, your money is working for you. You put $10,000 in and it turned into 64,000 from January 2003 to December 2002. But here's my point. If you miss the 10 best days in the stock market within that time frame, within that period, if you miss the 10 best days, your profit would have $29,708. So just missing the 10 best days, you go from 64,000, almost 69, almost 65,000 to 29,000 by only missing the 10 best days in those years. So not only compound interest is significant, but the best days in the stock market, you don't want to miss them. So you want to have that investment already growing on a regular basis, but you also want to catch the best days. When the stock market is going down, you're lowering the average of your investment. So you want to, you know what I'm saying? You want to buy more shares. So you keep it on an automatic recurring. And then when it goes down, like in September, you can use September as a buy-in extra, like, you know what I'm saying? Like a Black Friday. September, I'm gonna go Black Friday on the S&P 500. And I do $20 every week, but September I'm gonna do 500. You know what I'm saying? And buy it on the way down. Pay attention to when there's a stock market crash. Once the stock market crash is over, drop, you know what I'm saying? Drop your tax money in there. But what it is buying your freedom. It's buying time back. It's not, you know what I'm saying? I hate when I see an 80 years old, 75-year-old woman checking me out at Target when there should be, you know what I'm saying, 15, 16-year-old kids there. There's a lot of wealth in this country, and the easiest and most simple way is the stock market. Long-term hold, buy and hold. You don't have to read charts. You don't have to know anything about nothing except for investing incremental investments in the S&P 500 through a brokerage account. If you're watching this on YouTube, there will be a link in my description. I use Robinhood, and Robinhood will give you free stocks. I did it with my wife. She got Apple. I think they gave her like $5 worth of Apple stock, and that $5 is like at $12 or something like that. So that's a free 12. That's a free $5 that is gonna grow, forever till whenever she, say I need to take it out. But we got some good stuff coming on the way, man. The Fed is gonna make their first interest rate cut. So that means mortgage interest rates are going down. The price of a lot of stuff most likely will come down with it. Um, and that's it's probably gonna have an initial effect on the stock market, but you want to make sure that you are buying when the stock market goes down and not when it goes up, right? So what I basically told you was stop the hesitation, get in the market today and buy your freedom back. That's basically what the stock market is buying your freedom. Every time I go into work and I have a bad day, I buy some more. Every time I get in traffic and somebody piss me off, I buy some more. Every time something go wrong or my bank account getting a negative, when I get paid, I buy some more. You have to get in the mindset of ownership. renting leasing a car and going from one car to the next, a $400 payment, $600 payment, that's not ownership. You are borrowing that car from the bank. Going from apartment to apartment to apartment, that's not ownership. You're renting that space out. You know what I'm saying? Going going to Kroger for them groceries over and over, that's not ownership. You're not benefiting from the money that you're using to purchase those items. Everywhere you spend money, chances are that that company is in the S&P 500. So when you go to get gas and you go to get groceries, you are paying yourself back. You're paying for your freedom. You're paying for your future. You know what I'm saying? Which can allow you to live like crazy. Like, you know what I'm saying? You can leave the job early. And on top of that, on top of that, stocks, they pay dividends. So that is my next topic. I want to talk to the people that are closer to retirement, right? Because when you talk to people about retirement and they're close to retirement, and you talk about compound interest and growing over some time, they kind of, you know what I'm saying? It's kind of like, well, yeah, I know, but I say it's too late for me, or whatever the case is. If you are 50 years old, it's not too late. If you are 60 years old, it's not too late, because as a people, we are living longer. We're living longer. Our food product, I mean, not necessarily better, but man, our healthcare is better. A lot of habits we used to have, you know what I mean, in previous times are different. So we're living longer as people, which means we're going to need money to live longer. So when you think about a retirement, it's not just about compound interest, because you're going to have money from different sources, right? You're going to get your Social Security. If you get a pension, you're going to get your pension. If you have a 401k, you're going to get a 401k. But what you could do if you are older, right, and you feel like compound interest is just not going to do it for you, which, I mean, 10 years in the market is good. You know what I'm saying? 10 years in the market is good, but I want to give you an alternative on how you can I want to give you an alternative on how you can also invest for your retirement, to set up automatic payments, that money that will never run out. You know what I'm saying? Because your 401k could run out. You could have that, 80,000 dollars or 200, or what I'm saying, 1.2 million, and that could run out. But this method I'm gonna tell you right now is money that will never run out. So SCHD, I don't know if you can see it on the screen, but SCHD is a dividend paying ETF. So just like the S&P 500, the S&P 500 is the top 500 companies. SCHD is the top dividend paying companies. And a dividend is when a company pays the shareholder for holding the stock, right? So you got REITs, real estate investments, they pay dividends every month. Most companies pay dividends every 3 months. So SCHD pays a dividend. Excuse me. SCHD pays a dividend. Let's see. I'm not sure what their dividend is, but they pay a pretty high dividend. It's probably somewhere around, I don't know, 70 cent, $1.25. Probably somewhere around there is where their dividend is. And it's only $83 per share, right? So you think about it. You get you 100 of them. You know what I'm saying? You get you 100 of them, and if it's $1.75 per share, let's see, $1.75 times 100, you'll be getting paid $175 every 3 months. That's not a lot of money. But when you can't get your behind up and work, or you can't get up and go down the stairs, or you can't get up and, you know what I'm saying, go out here and get this money, you can't, you can't, you can't get your side hustle on no more, like you all out of options, that 175 every 3 months could come in clutch on top of your Social Security, on top of your 401k. You can also get other stuff, annuities. I'm not very educated on annuities, but I know an annuity is basically like something that you just pay every month, and then it's almost like an insurance policy. Like I think they give you a permanent payment. If you are closer to retirement, annuity might be something that you want to consider. You know what I'm saying? Try that out or whatever. And of course, during retirement, you can downsize your house. There's a lot of things you could do even when you're older to prepare for your retirement. By downsizing your house, you pay off the house that's a lot bigger. You know what I mean? Buy a house that's less money, pay that off completely, and you still sitting on extra money. So use your house for retirement. Use your social security. Use your dividend paying assets that'll pay you nonstop for life. And then you can pass it down to your kids. Now they have a recurring income of that $175 for life. You know, it ain't got to be 175. It might be 80 for you. It might be 500 for somebody else, but that's a guaranteed payment. Um, that's a guaranteed payment every 3 months from SCHD. So the stock market will not only grow your wealth, it also will pay you along the way. And this is how there's different ways, because when you retire, you want to look for different forms of income, right? You want to have like different setups. Like, okay, like I got, I got me a rental property that's paying me. Social Security's paying me. I done took out, 1/4 of my 401k. That's another thing. You don't want to take out all of your 401k right away in retirement. If you plan on living another, 10 to 30 years, that's 10, 20, 30 years of that money still accumulating. So you take out a portion and let the rest continue to grow while you get your social security, while you invest in, if you listen to my channel, invest while you're investing, while you're getting your dividends from SCHD or your favorite dividend stock or whatever. But the stock market, man, is the easiest way to wealth. It's the simplest way to wealth. I hate when I hear people talk about like, man, I just can't. I wish you could do $5 a month. You could do $2 a month. That is growing wealth. That is ownership. And if you're very fearful of ownership, you want to look inward and try to understand it. Because I was against the stock market at first. I was like, I don't want to hear that. And then I had to think about it, like, you know what I'm saying? Okay, well, buying shares of a company, that's ownership. Why am I against this? Like, is it something, cultural? Is it because you know what I'm saying? Is it because I've been taught not to be an owner? Is it because, my culture, we don't want to excel? Like, what is it like? You know what I'm saying? I had to look inward, and then I was like, man, I'm tripping. I'm tripping. I'm trying to own something. I'm trying to own something. I ain't buying another Apple phone without some money going back in my pocket. You know what I mean? But I only told y'all if you would have missed the 10 best days. I'm gonna go down the list, right? So going back to the thing, if you had $10,000 invested in the S&P 500 from January 2003 to December 2022, if you missed the 10 best days, well, if you had it completely invested, and I'm going to round these numbers, if you had it invested the whole time without, you know what I'm saying, taking nothing out, just left the 10,000 and sit, not adding no extra, just putting the 10,000 in January of 2023 and letting it sit till December 2022, your $10,000 would have turned into 65,000 off of just letting it sit, right? So if you miss the 10 best days, that 65,000 would only be 30,000, right? That's less than half. If you miss the 20 best days, you go from 30,000 from only missing the 10 best days to missing the 20 best days, you go down to 18,000, right? You miss the 30 best days, you go down to 12,000. You miss the 40 best days, you go down to 8,000. You miss the 50 best days, 6,000. And if you miss the 60 best days, you only at 4,200, which is 93% lower than if you would have just had it invested that whole time from January 2003 to December 2022. So that's a big drop, especially from having it invested the whole time to missing the 10 best days. That's what makes it so important. The stock market is going to have random blowups. I mean, $20 days, $25 days. And when you have 25 shares, 50 shares, you don't want to miss those $25 days. I mean, I don't care if you have half a share, you don't want to miss those $25 days. You know what I'm saying? That's, years worth of compound interest in a day, just because you waiting on, like, okay, well, let me wait for me to get my taxes. You get paid every week, man. Drop $5 in that thing, man. Drop $10 in that thing. Become a business owner. Buy your freedom. Buy your time. You know what I'm saying? Don't be out here working for these folks till you 70 years old, 80 years old, when it's not necessary. You making these $1 million companies just rich, going through your subscriptions. You got Hulu, you got Netflix. You know what I'm saying? But $20 every paycheck is too much to invest in your future, to grow your wealth, to leave something back for your kids. To, if I get fired tomorrow, I got something to sit on for 6 months. If I don't have insurance for my house and the house flood out, you know what I'm saying? Whatever. It's meant for retirement, but it's whatever. It is growing your wealth. And the way this country operating, without wealth builders and without wealth growth, you will starve, you will struggle. And not saying that not saying that off of anything political, or, what I'm saying, oh, because of this president or that president, this is how I feel. I just know financial history. I also know what the government is doing with their money. And it's not looking good. You know what I'm saying? It's not looking good. Currently, the full benefit for retirement is 67. And chances are that will be increased in the future. By the time you're ready for your Social Security, your benefits may be cut. Because I mean, they wanna be the one to decide who has a good credit score or not. But you know what I'm saying? Our own government can't pay their own debts. So keep your debts low, keep investing, stay locked to my podcast, watch my YouTube videos, and all of that. But the most important thing I wanted to get through your head today is that you should be investing in the S&P 500 through a brokerage account and keep it on automatic. If you created a Facebook account or a YouTube account, you're smart enough to open a brokerage account. A brokerage account is another form of a bank account that you purchase stocks in. You know what I mean? And instead of purchasing individual stocks, you ain't no finance major. You know what I'm saying? Just buy the 500 best and let the money people manage that account while the stock market runs up. Um, that's it, man. I really wanted to hone in on the stock market, man, really, because my intentions was really to talk about something else, because I know people get tired of me like beating that down on them. But then I seen this thing, man, and I was like, bro, if you just missed the 10 best days, you at like, I mean, damn it, almost over 30,000 less dollars for missing the 10 best days in the stock market. Stop playing. Stop playing. You're not too old to invest. You're not too broke to invest. You're not too young to invest. Ownership is the only way through financial freedom in this country. And if you keep running that rat race and not being the owner, then you're gonna struggle, dog. You're gonna struggle. But like and subscribe if you're watching this on YouTube. Follow me on my podcast. I kind of fell off a little bit. Next week, I'm gonna probably talk about stuff a little less stock markety. I'm gonna try to get into, you know what I'm saying, some day-to-day finance. So I'm gonna come up with some topics to talk with y'all about that. But I was really excited about the Fed cutting interest rates, and I wanted to get on here and talk to y'all about that. I also seen that article about missing the best 10 days. Don't miss the next 10 best days in the stock market. If you're, like I said before, if you're older, in your 50s, 60s, and you feel like it's too late to invest, something is always better than nothing. You know what I'm saying? And you can always manage and adjust when you get older. Like, you know what I'm saying? Let me go to a cheaper apartment. Let me move to a cheaper state. Let me, you know what I'm saying? There's ways to move to where, like, you know what I'm saying? If you just turn 15,000 into 40,000, you know what I'm saying? That ain't gonna pay for your full retirement. But if you adjust and make a move, that might be a lot in a different location. That might be your gas money because you want to drive 2 hours every month to see your grandkids. That might be, you know what I'm saying, while your social security and 401k pay for life. That might be, okay, I love streaming services. Let me pay for all of my Hulu. I know as long as I live, I'm gonna have Hulu and Netflix. You know what I'm saying? Whatever it is, you got to build your army of dollars because the dollar isn't worth anything. You go to work every single day for dollars, but without turning that dollar into an asset, future ain't looking too good, man. I'm Mike the Money Motivator, man. Like and subscribe or follow me on the podcast. I'm gonna talk about a different topic outside of the stock market next week.